How's everybody doing, guys? Okay, great stuff. So, hello, and welcome to a little weekly wrap up and outlook. So this is 50 pips, 9th of December, 2012. Again, not making any trade calls or recommendations. You and only you are responsible for the trades you may decide to take. The fact that you're listening to this means you've read, you understand, you accept all the disclosure and disclaimers here on the website and on the blog. So guys, I'm going to keep it a bit sweet and short this week because I'm still struggling with a bit of a sore throat. So I want to preserve my throat for the sessions this week. So let's look at a couple of things. First things first, let's look at the ES. So what's going on the ES, S&P E-mini futures? So we're looking at the market and we've been talking about a rotation higher into 1430s, 1450s. So I've got no change in outlook on that. If you remember, you can go back on the videos. We started to talk about this when we pressed into these 1340s. Okay, we took an initial stab. We're looking at the 50 back of that bigger move to hold 1368s. Market tried to rotate here a couple of times, but then it just broke below. But we found the aggressive buyers coming in at that 61.8. If we go back on a daily, you could see that that's the 61.8 of the move from 1261 into those 1474s. Okay, so once we start to hold here, we start in this rotation higher, and we talked about don't short a dull market, etc., etc. But the fact that clearly it looked at this market had buyers into this 1400, and we kept on looking at these supports and how they held, and we were looking for this rotation higher. So going into this week again, there's really no change in outlook. As long as the market here cannot find any fresh sellers below this 1400s and start to accelerate on any dip lower, we're looking for this to continue the rotation higher, okay? And at this stage, I think the first big test is going to be these 1420s, okay? You see that sellers came in before, twice, recently, capping right here. If we go into the week and we break above these 1420s and we start holding above there, then I wouldn't be surprised to see potentially quick in terms of velocity move back into that higher zone where I would expect more sellers to come in. That higher zone is going to be interesting also because not only is it a structural resistance zone, but we've also going to be running into this descending trend line from those highs. You see how it's coming in with those into those 1437s right there. So that's going to be a really important level to the upside. So if we find sellers coming in here, then we can start to see some healthy action, potentially move back into 1420s, then maybe buyers or whatever. But if we do not get any selling here, then I would not be surprised to see us, this famous Santa Claus rally, whatever you want to call it, go all the way back into 1470s into the end of the year. If we get some sellers coming in, I think this is going to be an interesting opportunity to look at least from some intraday shorting opportunities. But this is the key zone to watch to the upside, okay? And to the downside, again, as we discussed, it's really all about these 1400s. As long as the market keeps on finding a bid at those 1400s, then it's going to be very difficult, especially going into the end of the year, for us to find some aggressive sellers or downside mobo. So this is where we're stuck, 1437s, 1400s, and expect to see flows and momentum coming in if we start to break and hold outside of that range. Okay. Now, gold. What's going on gold? So gold, we got some moves down on gold, and what looked like a lot of pressure. It looked like some unwinding basically here. And what we were saying is the whole week is this is not the kind of move you want to get, jump in front of. You want to wait for this to start to base, okay? And what I liked here is to see this action. I know a lot of people were starting to get long here because we were around the 1700s. Just a reminder, our current range we're looking at, we're trading in on gold, is 1800, 1750, 1700. So what happened? We've come back down into the low end of the range, and we haven't really been able to get any momentum below that. So as long as we're closing back above 1700s, then as far as I'm concerned, the range is still 1800, 1750, 1700. Okay. I think this is an interesting area, even though not for me, but it's an interesting area to start to look for some swing longs, because there'll be some people that are focused on this 78.6 recent move, lows to highs holding, and you see all the buyers are coming in here. It's nice confluence with that previous support. I'm really focused on this previous structure where we found some very aggressive buyers here. But the most important thing for me are these 1700s, right? And now that as we start to close and hold above 1700s, especially on a daily, I think we could get a very quick move back into those 1725s. And then it could potentially be game on for a move all the way back up into mid-range, okay? But something you want to watch going into this week in general is that if we start to get, once again, daily closes below this 1700, and if price starts to move below these dip lows where, 1680s where the buyers were coming in, then I think the move to 1660s could be quite quick also. So I think it's really all about these lows. These need to hold. These buyers have to stay here. They have to continue to materialize on any attempt to go lower. And as long as price holds above the 1700, then I think the risk is for correction to the upside too. Now, whether that's going to be a selling opportunity or not, we'll have to see how the price reacts this week. So what I'm calling as the first pivotal level for the week are those 1725s. So the way I'm looking at it now, I'm saying, okay, those 1700s have held, and for the bulls to get more joy or to get more momentum, they're going to have to move it above that 1725 quickly and hold above. If not, it's still going to be pressure on. Let's see if that ties in with a 50 back of that most recent move. Well, yeah, you see that 1725 ties in with a 50 back, so expect shorts to come back in. So I think the chop area for the week is 1700, 1725. You need to see a break outside that range to see some more momentum and flows coming in the direction of whichever way we break. Now, Aussie, let's do two of the commodity currencies. Aussie, what's going on here? So we've been relatively bullish on this. I know, we got the rate cut, and even on the rate cut, it continued to rally. We don't pay that much attention to those things. What we focus on is the chart, and the chart seemed to be very well supported. What we were discussing is the fact that we'd expected most of the market participants to stay stubbornly short and try to short some place inside these two descending trend lines to looking for short opportunities. But remember, we're still in this measured move long, and we're looking for price to move into 0550s, okay? So one thing to keep in mind is that indeed this is a short zone, and expect the market to come in and try and press this lower. But especially if we hold inside this area and we don't manage to close back below, I think the risk is still for a move higher. And if you're looking for shorts, with this kind of pattern playing out, I think it'll be better odds to look for shorts above 0550s into those 0620s than to get stubbornly short here. Going into the week, what I'm looking at, if we start to see daily close below that 0430, then we could easily see a move back into those 0380s. But as long as we're holding above these 0430s, I think the play is still for a rotation back higher into 0550s, okay? CAD, what's going on CAD? Very nice action. We're still riding a swing short here. The play is quite clear here. So there's a couple of things to keep in mind, and we've been talking about this for ages. The chop range, the big levels we've been talking about for ages are the parity mark and the 98.50 marker, okay? If you're interested in the bigger outlook on the importance of that 98.50, just go back and look at the previous recordings because we discussed that. The 98.50 is extremely important from a weekly perspective too. But at the moment, the move that's in play is this measured move short from 0440s into those 96.30s. And we got a chance to get short, add that 50 back. We actually tried to front run this a bit. And currently this is playing out, okay? If we can't manage to close below those 98.50s, then we've got a chance that we just still stay in range. We try and consolidate and move sideways inside this 150 pip zone. If we start to close below 98.50s, this is going to be increasingly bearish, and the outlook for our move to play out for a bigger swing all the way back down to new lows is going to gain traction, okay? A lot of the bulls are going to be looking not only at the 98.50 because it's an important cycle level, but also because the 50 back of the most recent move from lows to highs is coming in line just below that, okay? And then you've got those 98.00 supporting below. I wouldn't be focused on the fib that much as that 98.50s, but keep in mind, especially if we close next week below 98.50s, the bearish tone is going to increase significantly. I think as a fake out level to the downside, watch any move below 98.50s into these what we call 97.90s. So basically it's a 50 pip range. If we break below and aggressively you see buyers coming in and they push it back above the 98.50s, then we could see a nice little healthy retracement. If we move below and we can't move back up and the pressure is still on, then I think the bearish momentum is going to accelerate. And you know, the next level to the downside, next support for me are those 97.20s. Okay. To the upside, the parity mark is still in play, but again, I think, you know, there's going to be a mid-range inside this zone, but I think it's a nice little play on this bigger 50 back short, which we're riding, and we really need to get a move below those 98.50s to gain some traction. Okay. Okay, so let's look at euro and cable. So what's going on cable? Cable, this is the chart we posted on Friday, okay? So what we said is basically 60.50s pivotal for Momo, right? Either we break above and we're going to 61.50s or below and we're looking for 60.00. We got back in there. We got a chance to get long there. Very nice defense of that 60.00. They couldn't even break below that level. So very, very nice defense. As far as I'm concerned now, as long as we hold, we don't go and pierce that 60, the risk is still for a test of the 60.50s, and this is going to be the pivotal level. So if we cannot break back above that 60.50, then most probably another test of those 60.00s. If we break above, then this move is nicely in play to continue this rotation higher we've been talking for quite some time about, for a move back into 61.40s, 61.50s. Okay, what is the bigger move we've been talking about? If you flick back on a daily, and we looked at this as we were in some big swing longs here, basically playing on lows to highs, front run of the 50 back with the 200-day moving average. We'd set this up way before we played out, patiently waiting for this, and we got long. If you remember, you could see it on the blog. The intra-week trade was for a move back into those 60.00, which was the top of this channel. This was a very nice setup. Triple confluence, 50 back, 200, and the bottom of the channel. Very nice confluence back into mid-channel. So that was a nice play. So that's the move that's in play, okay? And going into the week, it's really all about these 60.50s. The bears need to keep it below if they want to keep pressure on. The bulls need to move it back above. And, you know, all the other support resistance levels on the charts are valid. I'll try and post the chart tomorrow. It's pretty much the same one that's on the blog, so you can refer to that too. And then what's going on the euro? So on the euro, we had a very nice little move here. on Friday. So we had some aggressive selling coming in. And this was the chart we had similar to cable. So remember what we said. We said here on Euro, we said those 29.50s were pivotal for action, hold above 30s, hold below 29.00s. And what was interesting with this 29.00 is that we got a chance to get long because we had a 50 back of a move from lows to highs. Those lows were 26.60s, highs 31.20s, right back into the 50 back, confluence with this previous support, very nice chance to get long, got a very nice pop on this. Now we've gapped down, okay? This just opened, we've got a little gap down, so pressure is on. Usually gaps will fill, so most often than not, they will tend to fill. Remember, they don't have to fill straight away, they don't have to fill now, they don't have to fill the same day, etc., etc. The way I'm looking at Euro is really about to the downside. I think unless we can move below these 28.50s, and you see, because you've also got the 61.8 just below that, we might try and take some more stops, flush some stops. But if we cannot break below this level this week, then I would expect we're going to be back into those 29.50s that are going to be pivotal for a move back up into the higher level, and it's still stuck in this range. A lot of people are still going to be talking about this broader chop range on Euro, 28.00, 31.00, and that we ain't going anywhere. We're going to stay in that range. Remember, the end of the year tends to be bullish for Euro. It doesn't always have to play out. If all the other, DAX, everything keeps on rallying, S&P keep on rallying, we have a chance that this is going to drag Euro back up there. That could have just been some profit taking on some news hitting the wires on Friday. We still don't know. We'll have to see how this how the week plays out. Monday's going to be very important. And, well, broadly speaking, from a bigger perspective, I'm still looking for us to move back up into 134.30s on Euro, okay? You can go back. We've looked at this so many times. If not, just send me an email on the blog or send me a contact on the blog. If it's not clear, the bigger move we were looking at, I'll do it in the next video. I'll go through it all again. But that's pretty much what we're looking at going into the week. So again, I wish you all an excellent trading week. Have a great one. See you tomorrow morning for the London Open, and safe trading, and be safe, and enjoy the rest of your weekend. Take care, guys. Bye-bye.